All right, what's up, everybody? Mike here, head trader at True Trading Group, and it is November 20th. I'm finishing the day red. They started off really, really good. I nailed a 71% option trade. So the day started off really well, and then I just started giving it all back. And I got steamrolled again on a SPY put option trade. I didn't learn my lesson from last week, and that's what really frustrated me today. And this video, I'm going to talk to you guys a lot about why is the stock market so strong. Why are we trading near all-time highs? Why has the market been so strong? Why has the market been shrugging off every single piece of negative news regarding U.S. and China trade talks? Because there was more negative news today. And right before I started filming this video, more negative news hit. So let me kind of fill you guys in. This is going to kind of be more of a macro video, just kind of a better understanding so you know exactly what is going on. It's very important that we have these talks and you understand why things are doing what they're doing, what's going on in the markets, and what are the catalysts behind it when it comes to fundamentally. Because last week, if you guys follow my channel, you know last week I got completely run over when we gapped up to all-time highs. I bought SPY put options because we had negative news headlines coming out from regarding U.S. and China, that China wasn't willing to put a finite number on the dollar amount of farm products they were willing to buy from the U.S. That means that, and they said that talks have stalled. Then the next day, you got another news release that came out, news headline that said that the two sides are really struggling to come to a deal. I bought put options because of that news, because over the last many, many months, whenever we had a news headline like that, the markets would sell off, and they would sell off pretty aggressively. And we weren't getting it last week. And I ended up getting run over because then Larry Kudlow said we're just a few short strokes away, which means all the major points are finished and we're very close to signing a deal. And we gapped up to all-time highs, and I got crushed on those put options. Now, fast forward to today, we're gapping down. The reason why we gapped down here today was because the Senate passed a bill that would affect trade with Hong Kong and the relationship between Hong Kong and China. Why is that a big deal? This is not just about the U.S. saying we support democratic protest and democratic policy in Hong Kong. That's not just what this is about. Hong Kong is a free trade zone. Okay, they are exempt from sanctions and tariffs and everything that are placed on China. Okay, it's free trade in Hong Kong. Basically, what this law does is say that there's going to be a review of Hong Kong, okay, yearly, that's going to see if in fact Hong Kong is purely separate and is purely democratic, or is China still running the show behind the scenes and influencing Hong Kong and influencing what is supposed to be democratic policy. If that is the case, then you could see that free trade disappear, or Hong Kong could be lumped in, and there can be a lot of things that change around trade. Okay, that's why this is a little bit of a bigger deal. Markets gapped down because of that news. Now I'm saying to myself, okay, we had the news last week that the two sides were struggling to come to an agreement. Then we had China cut their interest rate for the first time in several years, which told me that they're more willing to act with monetary policy to help prop up their economy and withstand, okay, the storm that is affecting their economy because of the trade war, and wait out what happens with Trump with the impeachment in the 2020 election. Okay, so them cutting interest rates was another sign that tells me that they're not ready to make a deal. Now the Senate votes yes and passes this bill. Another thing, it pisses off China. China's like, U.S., you better not get involved. There will be retaliation if this gets signed into law. That's why we gapped down. I went after SPY put options in the morning, made a nice trade, 71% on the bulk of my position. Cool. Then, middle of the day, I'm going to go over that trade with you. I just want to recap kind of where we are. Middle of the day, we get a news report that comes out that says we may not get a phase one deal until 2020. Really? How is that news to anyone? Who in their right mind after everything that you've been hearing, really thinks we're going to get a deal this year. We have 1 month left. Why is this a surprise? Markets did this when that news report came out. Okay? Huge sell-off. Very high volume on the sell-off. Okay? Very high volume on the sell-off. And now I'm thinking to myself, okay, maybe now logic has set in, and maybe now we're going to sell off. Because last week I was buying put options all in here because of those negative news headlines. We never got it. We got that to all-time highs. I got crushed. Now I'm saying, okay, maybe now logic will set in, and I went ahead and I bought put options right there. Okay, right there is where I bought put options. We had the 23.6 Fibonacci level, which was lining up with the trade line and was lining up with this previous little low. Okay, so I thought to myself, after this big heavy sell-off, we were going to bear flag and then break down and continue lower and get down to 308. Okay, why 308? As I zoom this out, you guys can see a real nice support level down here. All right here. Okay, you guys can see a nice little support level right down here at 308. Okay, right here. So that's what I thought we had a chance to get down to, just like this. Okay, well, I was completely wrong, and all rationale and everything just goes right out the window because this market is strong as all hell and rips right back in my face, and I exit the position up here, and that is when I gave back all of my profits from earlier in the morning. And I was so frustrated when this happened because I'm like, Mike, you did not learn from your mistake. You bought put options on negative U.S.-China trade headlines last week. It didn't work. You did it the exact same thing again today. It didn't work. So why the hell is the market so strong? Let me explain why the market is as strong as it is. And right as I'm making this video, right before I just came on, this happened. What caused that? The House now unanimously voted to pass that same bill regarding Hong Kong. So now the Senate passed it and the House passed it. That means it's going to Trump's desk by Thursday, and he can either sign it into law or veto it. He's screwed. Either way, it's a lose-lose situation for him. If he signs it into law, China's going to be pissed. China has already said there will be retaliation. That could screw up the entire trade deal. If he vetoes it, the backlash is going to be insane because both the Senate and the House both passed it. And Congress can easily overthrow his veto. Okay? He can easily overthrow his veto. And all that's going to do is all of his political opponents are going to come firing out and say, Trump's got his own personal agenda. He's not being tough enough on China. It's a lose-lose situation for him. No matter what he does, he loses. Okay? He signs the bill, China gets pissed off, puts the trade deal at jeopardy. He doesn't sign the deal, he pisses off all his political opponents, and he may piss off also some of his supporters, and the backlash is going to be very bad in the U.S. media. Okay, you already know that. So I think he's in a lose-lose situation. Again, why is the market not selling off? Because if this was 3 months ago, 4 months ago, 6 months ago, the market's down 600 points today. Okay, off of this news. Why does nobody care anymore? That's what I'm going to explain to you in this video. Okay? The underlying U.S. economy is strong. It's stronger than people expected it to be. Everybody expected the U.S.-China trade war to have a much bigger impact, a much bigger negative impact on the U.S. economy. They expected to have a much bigger negative impact on the global economy. People were expecting global recession. People were expecting a U.S. recession because of the trade war. You saw so many analysts and all of these smart people saying, oh yeah, you know, we can't take too much of this, maybe 1 more quarter, 2 more quarter of tariffs, and then we're going to be in a full-blown recession. It's just not happening. The underlying economy is strong enough to where unemployment is at near all-time lows. People have jobs, and as long as people have jobs, the consumer is going to be strong, and 70% of the U.S. economy is made up of the consumer. We're getting into holiday shopping season. I would not be surprised if you see retailers like Amazon, Walmart, Target, Best Buy. I wouldn't be surprised if you saw all Bed Bath & Beyond. If you all these companies say, We just had a record-breaking Black Friday. We just had a record-breaking Cyber Monday. I wouldn't be surprised if we saw that. That will give another boost to the market. As long as people have jobs, they're going to spend money. Okay, there's a direct correlation between the strength of the spending power of the consumer and unemployment. Okay, that's why the market and the economy has been so strong, because unemployment's not moving and inflation's not rising. Inflation is below the Fed's target of 2%. Okay, so things are good, and things are not as bad as people thought the trade war would be. Now you got confirmation from the Fed that interest rates are going to remain low for the foreseeable future. So you had a lot of institutions and money managers that had some cash on the sidelines that were risk off when everything happened in December of 2018, when there was the Fed policy uncertainties. We were raising interest rates and all of that. That whole process throughout the year of 2019 created a lot of uncertainty around monetary policy, which caused a lot of money managers to go risk off, which means out of equities. Okay, now that the Federal Reserve has confirmed that we're not going to be raising interest rates for the foreseeable future, it's risk back on. And the market is trading, and the market is acting as if the U.S.-China trade deal is going to happen. Now it's just a matter of when. It's no longer if, it's when. And earlier in the year, it was if. And that's why every single news headline that was negative would pull the markets in very aggressively. Now you have a lot of institutions and money managers that are bringing cash back into the market. They're coming back risk on. Money is flowing back into equities, seeing it's exiting bonds back into equities. And that is why you are seeing the market hold up so well. This is my thesis. This is my opinion. I could be wrong. This is what I think. This is my analysis. I'm giving you guys my analysis on a global macro fundamental kind of position on why the market is not pulling in and why I have lost money buying put options every time there's a negative U.S. trade headline. Okay, I think the market is at a point where we're going to get a trade deal. It's just a matter of when. And now that the market knows that the economy can withstand the tariffs, there's no rush. It used to be earlier this year, it was we can only take 6 more months of this. We can only take 3 more months of this. We only have 1 more quarter before it's a full-blown recession. It's just not happening. But that was the thought process earlier in the year. And that's why every single news headline, the markets would react very, very aggressively. Now, because of the economic data that's been coming out, people say, you know what? The trade war is not affecting us as much as we thought it was going to. So if we don't sign the deal this month, we don't sign it next month, if we sign it in Q1 of 2020, if we sign it Q2 of 2020, not really a big deal because interest rates are still going to be low. The consumer is still going to be strong. Unemployment's still going to be low. So we're still going to be risk on. So this U.S.-China trade negative headlines are not seeing sell-offs like they used to. Now, that can all change as we get deeper and deeper and deeper into the things that are brewing, because there's a lot brewing right now with U.S. and China. And this new law, it's going to be very interesting to see what Trump does when this law hits his desk. And if he signs it into law, what is China's reaction going to be? If China walks away, this could be the straw that breaks the camel's back. And then once the market realizes that it's no longer a matter of when, but if is now seriously in jeopardy of getting a deal at all, then the markets will finally start to pull in aggressively. Until that happens, you're seeing the markets stabilize very, very well, and they're absorbing every piece of negative news that comes out regarding trade. So don't do what I did and continue to buy these put options, guys, with every time there's a piece of negative news headline. I'm at a point right now where the only way that I think this market really pulls in is if China completely walks away. As long as China is talking, as long as they're still sitting at the table, I think the market's going to go higher. The only way I think this market pulls in and we don't see all-time highs from this point is if China walks away. Okay, China walks away, I think we pull in. As long as China stays at the table, I think we go higher because of the consumer and what I think is going to be a strong consumer spending report in the holiday season. and the Santa Claus rally, I think, will be in full effect. That's my global macro thoughts on why the stock market is so strong and why we are still trading at all-time highs when there seems to be some serious questions and uncertainties about U.S.-China trade. That's what I think. So I hope you guys kind of enjoyed this, a little bit of a different video. Instead of going down over the technicals of my trades on the day, I wanted to spend some time and break down for you what's going on a global macro scale and talk fundamentals for a little bit, because we always talk about the technicals and everything, and we're always talking about technical and mental lessons. I like to spend some time and talk to you guys about fundamentals sometimes, because it's important you understand why markets do what they do. I hope you guys enjoyed the video. Make sure you like, comment, subscribe, flip that notification button with your mouse to make sure you don't miss any more videos. I'll see you guys in chat. Take care.